Yeah, I see money. I was impressed when I looked at it this morning.
Yeah, nice job. Nice job. Who did that? Was that Limitless or Steve?
Limitless, I think, right?
Oh, cool. Thank you for doing that. Much appreciated. Hey, Oka, what's going on? Jonesy, Paolo, how are you guys doing? Always type in the in Discord, Mr. Chat.
Oh, yeah.
So welcome, folks. Surprised we got so many people out. It's our Q&A, Profile 101, Markets 101, whatever you guys want to talk about. Let's start it off and fire away. Who's got questions? What do you guys want to talk about?
No questions
No
for the
questions. Okay.
Q&A.
All right, we're done. Bye.
See ya.
See ya.
I gotta start getting ready soon anyways.
I got one, JJ. I was running through my notes here. Do you have a different checklist for Globex versus regular trading hours, and kind of how do you visualize the two as just different in your process and how you approach things?
Okay. Who's speaking?
This is Limitless. What's
Oh,
happening?
hey. Good, brother. Okay. I look always at inventory. Um, because we don't have what we call initiative buying in this market right now by the big money management funds, everything is inventory. Inventory gets too long, the market sells off. Inventory gets too short, the market rallies. So the checklist is pretty much all inventory based and where the stops are. And the other thing I'll do is I'll look at how much time, like for example, if you looked at the ES right now, right, in Globex, we've spent, gosh, hours now above 36.85, right? And so I would look and see, oh man, we've spent a lot of time up here. Inventory is kind of getting long, and I'll start looking for adjustments to that inventory, right? Selling. And I do the same thing in RTH. The only thing about RTH is what I adjust for is how much quicker the price action happens. The moves happen generally faster because there's more people in the market. And, so you've got a lot more participation from a lot more varied participants of different sizes and time frames in the RTH, as to opposed to Globex, which is solely just short-term folks with large inventory to move back and forth.
Okay, so
So
same concepts, different time periods and speed.
yeah, different time periods, speeds. You know, I'll just like for example, say if this was RTH right now, and the breadth wasn't that great, and we had some fairly decent order flow, I would start expecting those lower stops at 3,700, 36.92 to get broken.
Question, and maybe I just missed it. Do you actually use breadth in after hours, or does breadth even work because volume's so low?
No,
Or
there is no breadth in after hours.
okay,
Breadth is calculated from the breadth that we see when I pull up this doohickey here. It's the New York Stock Exchange breadth, right? And tick. So you'll notice the market's closed, so nothing's moving, right?
Makes sense.
So yeah, if the New York Stock Exchange is closed, then you won't use those things. So Globex is pure structure trading. It's pure inventory and pure structure.
Okay.
Whereas the breadth is something that we don't really trade off of, or the tick, because of algorithmic trading and execution now. So we use it as sort of, kind of like the oil pressure gauge in a car,
Yeah.
right? You just want to see what the engine's running at, the water temperature gauge. Is it running hot? Is it overheating? that kind of thing. You don't actually trade off of it.
Yeah, I call it a secondary indicator, right? Is like if something was crazy off the rails with that, I'd pay attention to it and it probably come into play, right? Similar to your oil pressure. But
Yeah, exactly. Yeah, it's
oh,
it's just basically what's going on in the engine, but it's really not going to help us with trade location or
of course.
or risk or any of that stuff. But yeah, it just kind of helps. Like if the breath was 50-1 positive, you'd be like, oh, okay.
Yeah,
There's
something to raise
yeah,
your eyebrow to. Okay.
exactly. Yeah,
Thanks, man.
For
no
me, the
problem.
breath keeps me out of things more than it gets me into them, right? Like if the
Exactly.
breath is
Yeah.
like if it's 50-1 negative, then I'm probably not looking for longs.
That's been
And
market structure in
yeah,
general for me, right? More of a confirmation to stay out and look for what I consider to be more of like an A plus setup based upon market structure confirmation, as well as breadth, right, for this topic. But
Mhm.
no, thanks. Appreciate it, guys.
No problem. Great. Okay, we've got another question here. How do you know when longs are trapped, and what could that look like? Okay, great. Here's a great example, right? Right here, what you're seeing in Globex, right? And you're seeing, I would say longs are trapped because overnight inventory is fairly long. The value is all above Friday's close. Okay. So what we're doing here is we're looking to see, you look at time, Jonesy. How much time has a market spent over a level, right? And if it's spent a lot of time over a level, right, and it hasn't had any upside, like let's put it into real world terms, okay? Say you're long at 3,700 and you're looking for 37.15, 37.22. But the market's just kind of futzing around between 3,700 and 3,707. Well, you're starting to get antsy, right? And say if you were, long 3,700 and the market has been over 3,700 for, let's say, why my numbers gone now? What the hell's going on this chart? Here we go. So there's 3,700. We've been above 3,700 for 5 hours. And we're not really getting much upside. And say you didn't sell here at 37.10 or 37.08. So you're starting to get a little antsy. Now you are trapped long inventory. So what we do is we look at the lower stops, which is each half hour bar's low, to see. Now you see how expiry just took the W stop? That means there was enough supply to break the buy orders here and fill in those bids that are here, which are the bids from people who are trapped short. Does that make sense? Cool, right? So we just ran that W stop. Now, if we have a lot of supply, we'll come down and we'll run the U stop at the U low, right? So inventory is long and it's starting. I'm just going to just split out these profiles so you guys can kind of hone in on this, right? Pull that one back in. So you could see how we ran the W stop. And when we broke that 159, 120, 128, 68, a couple of hundred contracts spilled out. And what's going on, why there's responsive buying is the folks that shorted the market down here are waiting at those stops to buy. That's why there are buy orders here, right? So you look at the stops to see, oh, okay. So they ran those buy orders. How much, how much supply are we looking at those levels, right? So so you can use a candle wax chart as well because you can see it break that standard deviation, but you can see it loitering around that standard deviation because you know that there are traders who are short '08 and even maybe under who are trying to buy at that standard deviation. That's why you're getting that response. That's why it just didn't fall apart because there's buying there and the shorts are actually holding the market up. Now, people say, JJ, how do you know it's the shorts? Because there's no trader in his right mind who's going to be buying long here with size, right? Unless you're high on glue or have you been sniffing glue or something like that, you wouldn't be. That's not where you would be putting his position together, right? So hopefully that helps, right? When you get a gap up from Friday close on Sunday evening, Globex, and then it fills in Globex, is that closed? Are you talking about this particular Globex, Chris? Because we don't have a gap.
Glad up on.
No, there is no gap. There's no gap. If you open
You can't-
inside, hang on. If you open inside, this is very, very simple, right? Keep it really simple in black and white. A gap only occurs when you open outside the previous day's range. So if we opened above Friday's high or below Friday's low, we have a gap, right? True, we did, people somehow think that there's a gap, but there is no gap. You're opening inside range, so there is no gap. So you trade it like an inside day as opposed to trading it like a gap, because that's how people get into trouble. And there's the open of Globex right there. It's one tick above. Yeah, it is not a gap. The only is a gap, and you treat it like a gap when it opens outside the previous day's range. Otherwise, you're going to misread the agenda and trade it like a gap when there is no gap. I've seen that happen to people so many times. Sorry, who was talking? Was that LC?
I was going to jump in. Yeah.
Oh, okay, yeah.
The second part of your question, Chris, is you can't fill a gap or single prints in Globex. It has to be regular trading hours.
Exactly. Good point. Yeah. It's surprising. A lot of people are taught about this gap thing, but it's for the intensive purposes of actual pure structure, it's only a gap if we open outside the previous day's range. That will keep you out of a lot of trouble.
Yeah, Globex tends the pricing just get pushed around too easily. That's why we don't fill anything in Globex.
What time is a good time to start paper trading? Honestly, I think for newer traders, you guys should trade with me during the London Open. It's pure inventory. The price action is slow, and you can actually tell what's going to happen. You can, there's going to be one of two things that happen, so you can kind of adapt and see things happen pretty quickly.
Yeah, exactly. See money. I only look at the previous day's Globex. Everything else I don't even have in my charts.
I only look at the last previous night's Globex. The rest of the Globex, see, because for me, Globex is all about moving inventory, right? Let's take a look and see what happened. If I show you, right, just on this chart, just going to bring another chart in and show you guys. Here's what happened, right, in Friday. Friday at the end of the day, M period sells off. Now, why does M period sell off, right? M period sells off because the large traders who are in charge of buying, the wholesalers, right, they have to buy from us at the end of the day. They know that people are trading on day trade margin, and they have to return that money to their brokerage firm at the end of the day, so they're going to sell, right? So if you know that every day at the same time sellers are going to come into the market, what are you going to do, right? You're going to drop your bids and buy it as cheap as you can. So they buy it as cheap as they can, and then in end period, if you notice, this is why I look at the N and O close. Look at the N low, look at the O low. Look at the M period volume, look at the volume in the last two half-hour periods after the close. Right? Paolo, you know the answer to that question. This, you keep pushing that. It's adorable, but don't. Okay, so you got a ton of volume coming down here, right? It's absorbed by the wholesalers and the large traders, right? Very sneaky, Paolo. N period, right, closes higher than M. Look at the volume. And then O period has only 7,600 contracts. If this was panic selling, O period would have taken out the day's low, right? So what happens? You got to take this and sell it at a higher price. What's a market, you guys? A market is somewhere where you bring a bunch of cheap crap that you sell at higher prices to anybody who will buy it, right? That's what a market is. That's what Walmart does. That's what Kmart does. That's what Target does, You buy a bunch of cheap crap from China or wherever you buy it, you mark it up and you sell it. That's how you make money for a profit. It's very simple. So this is the cheap crap, and this is them selling it at the highest price. Then when the buying runs out, you sell the market down to your cost basis. This time they broke their cost basis, took out a couple of stops, grabbed all of the cheap fruit, and then ripped it right back up to resell it. Just like a used car lot. Right? So that's how we organize the market generated information, and we know what's going to happen in Globex. So if like someone was telling me on Sunday, they said, oh my God, it's going to gap down on Sunday night, right? Because of the way it closed Friday, right? No, I'm showing, I don't always separate it, TJ. I'm just trying to do it for educational purposes right now. Right? I could see it right away. I'm trying to make it clearer for you guys. Because I know what to look for, right? Because my whole life was about inventory, right? Take this, sell it up higher, hide it over here, leave it in Switzerland, hide the position all over the world. That's my whole life was that 25 years of inventory, right? Moving inventory, taking that inventory in, putting it in another country where compliance couldn't see it, getting it out of Canada, getting it out. My whole life, it's all about inventory, right? So, yeah, that's why I separate it out so you guys can immediately see that this is just liquidation from day trade inventory, right? Because you don't want to hold this crap over the weekend, right? So we dump it, right? And especially on a Friday, right? The way I saw it close, everyone was looking, and including me, we were thinking it was going to come on and take the highs, but it just didn't have the firepower, and nor did we have the agenda to do so, right? Yeah.
TJ, check your time zone settings.
Yeah. Can you chart the chart next to those? Oh yeah, yeah. This right here, this is the volume. This is the volume transacted at every tick. So currently at 37.01 and a quarter, in this period, 341 contracts have traded there. It's just today. It's just this half-hour period. And when you squish them all together, it's just for the day, chat. So if I squish these together, right, at this level, 1,800 contracts have traded at night, right? How you tell where the bid is, chat, you know what you guys call support and resistance? Support is where the bids are. Resistance is where the supply is. It's that simple. So where would you look for bids? You're going to look for bids in a market where the lower stops are, right? Because what is a lower stop? A lower stop, say if you're long 36.95, your stop is going to be here. A lot of people will put their stop at 36.93. So that means there is a market sell order there, which means if I'm a short seller, it is my job to know where the sellers are so I can cover my short. So I'm going to be hanging out at that Q low, just like they were hanging out at the U and the T low, like hungry dogs waiting for contracts to fall off the table. You see? And that's where the bids are. So you don't have to look at the bid times the ask and all that stuff, right? You watch a level, right? Like where the shorts are, where the stops are, where an EMA is, where a standard deviation is. You see, like, look, here on a 5-minute, you can see the market break that first standard deviation, and now it's come back up to it. Why wouldn't it just break down and come right to VWAP? Because there are responsive bids here. There are buyers here. You don't even need a TPO chart to see it. You can see it on a candle wax chart. It's plain as day. because these bars are actually representations of business transactions. That's what a chart is. It's a sales chart, right? It shows you where the buying is and where the selling is. That's all it is. People have just overcomplicated this over the last, I don't know, ever since the invention of the microchip. But trading never used to be this complicated. Right? You find a level, you watch that level and watch how price reacts at it. That'll tell you about the order flow at that level. What else you guys got? My particular stops depends on the volatility, Chris. In Globex, sometimes I can get away with a 4 to 6 tick stop. In 2018, 2019, Ray and I were trading with like 3 tick stops because the market was really mechanical and there was no supply. The more supply there is in a market, you have to give it a little slippage.
Mhm.
No, you don't need to learn how to read a DOM, and that's the last thing you should do because the DOM is given to you guys to purposely confuse you. There's only one reason why we have DOMs in trading software, to confuse people who don't understand anything about trading. It is a simple fact of life. It's an order book. A DOM is a representation of expressions of interest, right? They're orders that are not filled. These are actual transactions. So what are you going to do? You're going to look at transactions, or are you going to look at, or are you going to look at people screwing around and showing an order book? Don't waste your time on the DOM. It is a huge waste of time.
Yeah,
I've just saved you like, I don't know, 300 hours and
easily.
so much frustration. I understand the difference between a poor high and a poor low. Oh, okay. A poor high, right, just tells me that the buying's run out. A poor low means that we ran out of supply, right? And it's all in context, right? See money, people make a big deal about it. What I want to do is I can short a poor high and I can short a proper high as well, right? It's just that a poor high just shows me that the buying just shut off like a switch. A proper high has a little bit more excess, so there was a little bit more oomph there. Like a poor low is a real gimme, right? A poor low or a poor high double top, like a poor high is an immediate short. Whereas a proper high, you got to see if it accepts in that excess and comes back in, or whether or not that excess is done for a while. But with a poor high, like a double top, a lot of traders will just automatically short that, put their stop a couple of ticks above it, and then boom, right? Oh, thanks, Brent. Yeah, Paolo, it's the pre-market checklist is in, oh, where is it? It's in the market profile basics, I think. Here it is. Oh, no, they're not going to let me copy it, are they? Hang on. Thanks, Josie. Oh yeah, I use the DOM to place my orders and move the stops. But I don't, because it's an order book, like a level 2. Like, because my job for 25 years was to use the level 2 to confuse you guys. So, I mean, that's all smoke and mirrors, right? Ah, the wide POC. Hey, KVX. You know what? Wide POCs used to mean accumulation. I don't know. A lot of people think that this is the low because of the wide POCs. I don't trust it yet. I could be wrong. Right? I've seen a lot of talk on Twitter about the wide POCs. A lot of people think that it's the low and this is accumulation by size traders. We'll see. For me, if this thing can't break 36.55 as we go through the week, Yeah, we'll rotate up, right? If it breaks 36.55, down we go lower, right? ES
I don't
does
look
trade even though markets are closed.
I don't look at wide box like that. I think of them as something where a lot of time was spent and that makes them more likely to be revisited in the future. But I don't think necessarily that that has to be the low. Yeah. It's something to carry forward. Like if we go up or down, it doesn't matter which direction we go,
Yeah.
then I'll carry that POC because it's untraded and wide, which like it's wide enough that it's a reference that I can use going forward.
Yeah, it's a balance zone. And you got to remember that the work that was done on market profile originates in 1986. Okay. Which does not take into account the current business dynamics and the business model of the US capital markets, right? So in the old days, a B profile meant institutional buying, right? Right now, it could mean that the order flow just ran out and the wholesalers just sucked up all the supply, which they're happily selling tonight. I mean, this morning at higher prices and all night. And tomorrow could come by and that the whole thing could come apart like a, like a house of cards, and we could be at 36.17 in a heartbeat, right? So, while I do have immense respect for the profile guys who brought us profile and, taught us about it, a lot of them have not adapted it for the changing business conditions and how the US capital markets have gone from a commission-based revenue model to an asset gathering revenue model, right? Which completely changes the way we trade, right? Oh, what's the difference? It's just these levels here are from after COVID. They're from April 2022. And then these blue and red levels here are from when the S&P was 2000. The levels on my candle wax charts are just from December, when I realized that the market was changing in October, November. So I came up a way to cut up the large ranges that we're going to have so we could see short-term inventory using candles. I do. Yeah. I do. It's an inventory correction, right? Sure thing. I will do that. No, the ES is not closed, Chris. The electronic session is open. The New York Stock Exchange and equity markets are closed. So what's moving the market now is the same thing that moves them at nighttime, which is inventory, right? Order flow and inventory. Hey, Vivi, how you doing? Any tips on scaling in and trade management? Yes. All right. You should only be scaling in, Paolo, and managing larger positions in markets where it's not volatile, right? And if your account can handle it, right? So if you're scaling into a market, you should only be doing so once you've ascertained whether the order flow is reliable. So if it's choppy back and forth, you should not be scaling in. You should buy your lot like 3 and then be scaling out. That is how you manage it. You only scale into a trade when you've ascertained that there's price stability in the direction that you are trading. Does that make sense?
Paul, the other thing to keep in mind too is
Cool.
when you're scaling, generally, I would advise most traders shouldn't scale at all.
Exactly.
especially scaling out is a whole nother conversation if you're
Yeah.
trading more than one contract, but scaling into a trade is generally means your trade location is bad. So focus on the trade management part and finding good trade location to enter, and then you can scale out if you take more than one contract. And for trade management, the best trade management is good trade location. Yeah, so VB, like if you like say if I was, I don't know, taking a long position here, right? On the way up, I would probably be out one at the 9, one at the volume puck, and maybe the last one at ace high. I don't need to catch the entirety of the move because the move, like I don't need to catch 100-point move. It's nice when that happens, but I'd rather just take profits when they're there and then focus on the next trade.
Yeah. For traders who are trading anything less than $100,000 account, you should not be scaling into these markets because there is no price stability. If you've noticed the way the market traded on Friday, Thursday, Wednesday, if you were scaling in to these markets, you would have gotten destroyed. Right? The other thing about scaling into a market means you have the skill to do so. Right? Most people don't. And I'm being really brutally honest because I'm trying to save you guys money. Right? You have to have a certain level of skill to scale into a market. Happy Halloween, Naeem. You need to have a certain ability of skill to do so, right? And you know when you don't, right? You should just start with 1 or 2 contracts, maybe 3, and then scale out. Yeah, do not scale into these markets until there's a bid. This market is still trying to find the bid, right?
Mm-hmm.
Look at the daily chart on this thing, right? Everybody thinks that we found the bottom. I don't know. To me, this does not look like we found the bottom. I could be wrong, and I hope it was. I hope I'm wrong for the sake of everybody trading this market. But I've been around the block, right? This ain't my first barbecue, right? So, right now I know that the market's going up and everybody thinks it's great, but I know this is just they're taking the inventory from Friday and blowing it off into anybody who will buy it,
Yep.
right?
Yeah,
Right.
Jonesy,
Yeah, it depends on who it worked for, Jonesy. You're pretty rare if most of the people I know who tried to scale in during COVID got their ass handed to them, right? But,
mm,
when the thing was jumping around 20 points every trade,
yeah,
I
COVID
don't know
trading
many
was
people.
scary.
Yeah, yeah. Oh, pre-market equities. Okay.
Okay.
That's a different breed of cat, right? In the ES, you would have been
It was
standing on
not
the
fun.
corner.
Yeah.
On the ES, you'd have been standing on the corner holding your underwear and going, "What the F happened?"
I can't tell you
Yeah.
how many times I took a trade and then before I even was able to move my stop, I was already out of it because it just jammed me.
I am fast at getting in and out, Cobalt, because in my old job, if you weren't fast, you were fired. Right? See, in my old job, you had to do trades in 30 seconds or less, and we did trades on the phone. So if you answer your phone on the second ring, guess what? You're fired. If you take more than 30 seconds to hit a bid and get a report back to your client who's waiting on the other end of the phone, you're fired. So that's why I'm really fast. That just takes time. It's repetition, like playing a video game. So what you want to do when you're looking at these charts, right, and trying to figure out how I'm going to trade this thing, right, when it breaks above a level and then comes back down and then breaks above it, that's what I wait for. I don't wait till it comes down and hits a level to buy. I wait till it cleans up under that level, comes back up, and then tries to retest it. And if I miss it, I miss it. It's a pain in the butt, and it took me the longest time to figure that out. And guess what? When I started doing it, it didn't work right away because that hand-eye coordination to be able to get in and out really fast is not easy. but it's just a function of practice. Just like, for example, if you're a linebacker and you know that a running back from the team, like you're watching game film, you know that a certain running back is going to break left in this formation, or he's going to run off tackle, or he's going to run through the A gap. That's why you look at the great linebackers like Mike Singletary and stuff like that. They would be at that gap before the running back got there and hit him, right? But that is just a function of time watching game film. For us, that's time watching price action over and over and over and over and over again. That's the boring part of trading, right? Is that practice, right? It'll come. It took me a long time to do that. Even though I'm one of the fastest institutional traders out there, even with phones, it took me a long time to develop how to be fast. And also, every software system is different, how you enter orders and things like that. That's why you get comfortable for it. Yeah. Yeah, I wait for it to recapture a level and then get in, right? But it's a lot easier said than done. And I'll admit that any day of the week. And I'll admit that it was, frankly, it was a bitch for me to learn, right? And it was really frustrating until I realized that it's going to be like, like anything else, it's a function of practice. You know what? I don't do the numbers, Chet. I have to admit I'm really bad for that. I do my trades, I make my money, and I'm done, right? Or if I find that I'm not trading well, right, I'll do 2 or 3 trades with the micro, and as soon as I lose 20 to 30 bucks, I stop trading and reassess because I've gotten something wrong, right? I'm insanely cheap. So even if I'm trading like $1 million, $2 million account, I start trading one micro to test not only the market, but myself. And if I start getting stopped out multiple times in a row, it means I'm missing something. I'm not seeing something. I'm trading too early. I'm too anxious. One of those things. And I'll monitor myself. But I don't look at my win rate and stuff like that. Like, I'll have, if I make like $1,000 in a day, I'll be done. Right? Because I trade for income. Right? I like to trade for income and I don't like giving it back. Right? That's just the way I am. I've been taught because I was raised in this industry and we're taught to make money every day. Right? So, I make a little dough and then I get out. If the market starts changing and I start giving it back, like say I make $1,000 and I give back 200, I'm done. That's it. I take my 800 and then maybe I'll trade later on that night. But I really am into keeping what I make. I don't like giving it back. And that's the way I was trained. Because I know I'm going to be trading in 5, 10 years. So there's nothing special about today. There's nothing special about the trade I'm in. Right? It's like I'm washing dishes. There's no difference. My trades are all inventory correction trades. At first, I like sort of rotational days, like in balance, right? I had a hell of a time trading a trend day back in the day. I was really bad at getting onto a trend and holding it. You're gonna have tough days. I've had many of them. I've had tough days when I did deals. I had tough days when I was retail trading. But it's just a day, right? I don't look at this as anything glamorous about it. For me, it's like washing dishes, right? There's no big deal. Hey, JLS, where you been? By waiting for a retest, does it mean you don't ever assume a level will be hit? Oh, I have no confidence in the level until the order flow proves me. And that's why I use a stop. I have zero confidence in any level until the market tells me to have confidence. Oh, good. And in this market, in this market, um, don't assume anything. This market, don't turn your back on it. This is not the market we had last year. It's a snaky frickin' thing, this thing. Do not turn your back on this market. Being paranoid is the best thing you can do for yourself. Exactly. Pickpocket markets. Remember, we're scavengers, right? Yeah, sure, TJ, no problem. Remember, we're scavengers, right? That's what retail trading is. It's being a scavenger, right? Get what you can and get the hell out.
Can you hear me?
Yeah.
Yep.
Awesome. So yeah, I was kind of off one of the questions you answered a while ago. I've noticed in like watching the live trades and stuff, like your entries, like you'll be saying, okay, there's a seller here, there's some supply here, so like the price will come down. You're waiting for it to like watch a bid, like find a bid, and like when to jump in. So like whenever you jump in, the price is always seems to be going that one direction. You try your stop up really fast, and then it takes you out at some point. Versus, I feel like a lot of people, they get in, and the price is just kind of chopping around their entry, and then they just decide when they want to get out when they get in. So I don't know. Is there any insight or examples of how you can, what you're looking at, like how they're
okay.
finding
Okay.
the bid and all that good stuff?
Okay, let's see. Let's watch this right now. I don't have the view app properly aligned on here. Give me a sec. Let me get this
Can't even
set up.
see it because it's like right on top of POC, I believe.
Yeah.
Oh no, it's down. It's down at 91. 36.
Yeah, no, I've got it on my but these anchored view app charts, you've got to anchor them every night at the Globex Open. Here, let me just anchor it here. There we go. Give me a sec.
Mine's automated.
Yeah, automated. Fine. Automated. Just wait. One of these days, there'll be a ghost in the machine.
It'll
all
be
you guys will
wrong. Yeah.
Yeah, exactly. Okay, so all right. Okay, here. You see how it's coming back over that standard deviation, right? Now I'm watching this area here. And so what I'm watching for now is at this standard deviation, I don't see a trade yet. So what I'm going to do is I'm going to wait to see if it can come over the 9 EMA. I know that inventory is trapped over 3704 because it's sold off. So I'm going to expect there to be sellers. Bada bing, bada boom, there's a seller, right? So this tells me right now to chill out and wait. And what I'd like to do is if we clean up and we can tickle 04, and if we can get back over 4, come back down, I'd look for 4 to 6, right? Now, I get stopped out all the time, right? And I don't mind getting stopped out, right? Because for me, a stop is basically hang on just a sec. Hang on. So right now I'm in wait mode. Aha, there, that's what I'm looking for. So there's a sign. Now let's see, you got to be a little patient here. Now a lot of people would just jump in and buy it right here, but I don't have any confirmation yet.
Hey, JJ.
Yep.
Is the only way you can, so, short covering, this is the idea of short covering. The only way you can identify generally what short covering is based off of the price action and the general location you expect it to occur. Is that correct? Or is there any other things you can
Also,
look for?
what's going on?
Yeah, okay.
Okay, so if a market goes up and comes down, who's going to buy?
Shorts.
Bingo.
Cool.
right? Now, there is the other kind of initiative short covering you get when a market starts to rip and people have to run in and cover, right? But
Fair.
generally, right, most of this market now, when it comes down here, right, watch how it's coming down. Right now, you know the stops are going to be at the bottom of the X period. So you expect there to be short covering. Now, why I know this is because I get paid 150 grand a month and 1 million free shares to trap shorts, right? To orchestrate a short squeeze. So what I'm doing now is I'll like say I want to trap shorts. I'd sell a little, sell a little, sell a little. And then what I do is as soon as I got to this level here, I'd stop selling and I'd bid for like 5,000 contracts, right?
Yep.
And then the shorts go to cover and I'd pull my offers up over 3703. And then I'd bid 1,000 contracts at 3702. So that means you trap them underneath,
Mhm.
right?
I think it's important to note too. I was just watching the 3rd episode of Mark Douglas when he explains dynamic traders and how they have the, physical capital and the emotional capital to do this stuff, right? I think most people don't believe it's possible to do what you just said. It sounded so simple, right? I'm just going to bid it down a little bit, put 5,000 contracts out there. Most people don't believe it's that easy because they haven't done it themselves, right?
Well, I mean that's why 99% of people don't make money trading,
Right.
because they have no clue that it's a business.
But that episode blew my mind, and it was just
Yeah,
kind
yeah,
of like, just kind of let me look at things a bit differently. So anyway, thank
yeah.
you for
Oh
your.
yeah, yeah. No problem, no problem. Yeah, and we
For
actually don't
anyone who
we don't
hasn't
call it
watched it, that's the best one.
yeah, and
It's so good.
we don't call it spoofing. It's just called work.
Yeah, it's a business,
Okay,
right?
right, it's a business, right? The Mark
I'll grab it for you
Douglas
guys.
stuff is beautiful. It's really. I wish he was still with us. And my yeah, I won't use a really big stop CeeLo because you know what? If the market's really choppy, right? Sometimes when I'm in the groove and I'm on like I'm mentally like there, I can trade chop really, really well. Sometimes I'm trading chop like a giraffe walking backwards up a ladder. I am just not in it. And so I will, because I know myself. And if I haven't slept, if I'm stressed out about something, then I won't trade those choppy markets. And because I don't like using like a 5-point stop or a 10-point stop, right? For me, that's like giving money away, right? So if I'm in the groove, then I can trade the chop, but I'll never go more than 2 points on a stop. The COVID crisis, I had to use a bit of a bigger stop, and it was okay with my clients because I was trading quite a large account. So they were like, I'm gonna have to break a few windows. They're like, okay, go for it, right? But you know, generally, if I'm trading my own personal account, I'm 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 a savage when it comes to not giving money away, right? No problem.
I'll post it, CeeLo, and I think you guys can post. There you go.
Thank you. Do you aim for 1 to 3 points? It depends on VB. It depends on the market. In a choppy market, I'm very happy with a couple of points here, a couple of points there, on 3 to 4 contracts, right? If the market tells me that there's a bit of a move, I'll let it run a little bit. But I'm a fast trader because I love getting in and out quick.
I tend to trail my stop more VB, but it's usually really close to the current price.
Yeah.
And there's times I break away from that a little bit, but generally speaking, like I'm trailing it up because I don't want to give back anything. So I might give it a point and a half, 2 points of space, and then I'm stopped out. But if it like on days where it like where we're trending and it just going in one direction, that's super helpful.
Cool.
But generally speaking, like if we're like ripping in one direction, I'm just gonna hit flatten and take the money, and then I'll reassess because it will come back
Yeah.
more often than not.
So Chet, for a new person to the room, the best thing you can do, right? Especially if you're a consistently profitable trader, this doesn't apply to you. But if you're not consistently profitable and you're learning how to trade, the best thing you can do is not trade for at least an hour when I'm talking. And what that's going to do is that's going to take the mental pressure off of you so you could actually let what I'm saying absorb. Because a lot of times, and I've seen this, I'm pretty much 100% on this. I'll tell people, they'll come to me, JJ, I did this, I blew this up. I'm like, didn't you listen to me? Well, I was trading and I wasn't listening to you. If you actually watch what I'm saying over time and let it absorb, right? That's why I have the candles up. I have the candles up. The candles are like, when they put an alarm clock and they wrap it in a blanket for like a puppy when you bring it home, the candles are there to make you guys feel comfortable, right? Because most people are used to seeing candles, right? The TPO is daunting as hell for people who have never seen it. When I saw TPO charts myself, I'd been in the business for 20 years and they still hurt my head. I'd never seen them, right? So start looking at the candle chart and noticing what I'm talking about. And what we're doing is we're looking for, right? What we're doing is we're looking for how the market responds when you get to a level. Now, remember I was talking about I'm waiting for it to come back over that 9 EMA, right? And then get over that standard deviation. Now, I might have missed this trade because this move was only a 1-minute move. So now I'm going to see if they backfill and how much they backfill. See how they're breaking 3704? Now I want to see if they hold that blue line, which is the first standard deviation. If they can hold that blue line and the 9 EMA, then I might be enticed into getting into a long. But I'd prefer to go long at 04. So I'm just going to watch now. We got 20 seconds until that next candle opens. So basically wait and see if we can hold 3704, or if we look below it and come back up over it, you can go long, and then first stop is 3706. So if you're long 04 quarter and the market can't get to 3706, well, there's your warning sign, right? There's 05 half, right? The stops are going to be at the A high. So we should be able to get to 06. Now here's the candle that I'm waiting for. It's open. It's going to come down. Watch it at 04. See, look, do you see how there's a responsive bid at 04 half? Right? It just lifted. So there's a buyer at 04 quarter. Right? Watch. Now let's see if that buyer has any continuation. Now, the other thing you got to remember, this is an electronic trading session where there are not very many people here. Right? So this trade might take a little while, but as long as it holds, and say you're long 04 quarter, 04 half, right? You're waiting for it, and you're waiting to see if it starts coming down and trading 04, then you know that trade's in trouble. As long as there's a responsive bid when the market comes down, you're okay. If that responsive bid disappears or gets filled, then you know that your long is not working. You're going to have to be a little bit more patient because it's really slow. See, look. There's 05 half, 05 three quarters. Let's see if we can kiss 06. There's 06. Oh, hey, daylight. See that? Anyone? Are you guys there? Okay.
Yep, still here.
All right. All right. So that's how I look at this. See, now there's 06 quarter. I was saying 04 quarter, 04 half. It's not the greatest trade in the world. Like, this is not private jet money. Okay.
Hey,
There's
JJ,
also
Yeah.
Quick question for
only
you.
12,000 contracts traded. So keep that in mind. Go ahead. Sorry.
Yeah, this is super light volume and choppy, right? But I had a question about high volume, low volume nodes, or as you call them, cost basis. Just
Low
generally,
volume lymph nodes, yes.
yeah, lymph nodes, yeah, whatever you want to call them, right? Really, how to just think about these, right? How to incorporate, I guess, the concept of these into
Okay,
both the short and long time frame. So I noticed
cool.
sometimes you'll look like maybe a day back and look at, the volume profile there, and then you'll look back way far because that's the only reference, right? But that's a year ago. So how do you look at them differently? What are the comparisons there about looking
Okay.
short and long?
All right. Well, like for this Globex, I saw there's volume here from the previous sessions, right?
Mm-hmm.
There and there, all in the same place. So they took, the market came back down. They took it and sold it. And when they came back here, this is where I'd be looking to transact long, right? Because we came back to the cost basis. They sold it down, right? And they stopped right here, right where their position is. Let the market breathe to sell it higher. Now you've done this twice, so you've got more people trapped over 36.88. So you're going to flush your cost basis and come down to the next cost basis,
Mhm.
right? And then back up over it, right? So basically, what the way you look at it is, say we're talking about, I don't know, my favorite example is toasters, right? We buy our toasters from China and we paid, our cost basis is under 37.76. So we're happily selling them up here. Now LC comes along, opens up a store, and starts competing with us. But maybe he paid 36.84 and higher for his. So when he starts to sell, we outsell him because we paid less for our product. That's all a high volume node is. It's the acquisition of size, right, by large traders, and it's being sold at higher cost basis. Now, in markets that are very mechanical or Globex type markets, there's no outside sellers. The only sellers who are selling here are trap longs. So you know that their cost basis is above 3,700. Your cost basis is down here under 37.76, right? So you sell the market down, and while you're selling the market down, you are cashing up. The people who have a cost basis at 3,700, 36.96, they're losing money. You're making money by selling the market. So with the cash that you raise by selling the market down, you buy their product here, then take it right back up to resell it.
Okay. And then
That's all it is.
obviously you would just use like a key level as further confirmation to
Yeah.
that volume level as
Yeah.
well. And that's even
Yeah,
stronger.
exactly. Yeah, like a market profile level or an EMA or a standard deviant or whatever you
Right.
guys are using.
More the
Right.
merrier, right?
Yeah,
Closer the better.
exactly. Yeah, and if you've got 3 or 4 of them lined up, then the stars are aligned.
Awesome. Thanks, JJ.
Yeah, my pleasure. Yeah, hopefully I've been seeing that, holding on to trades and stuff like that. I sincerely hope that we'll start getting some institutional participation. I should say investment money coming into the market so we can hold these trades a little longer, because investment money helps act as sort of like shock absorbers on a car, and it cushions those moves, and the profiles will start tightening up a little bit, right? But man, until we do, I'm in and out, right? Like Danny DeVito says in Other People's Money, I'm not a long-term player. When you say sell, do you mean open a short position or just sell something? Oh, no, TJ. They're selling when they're selling that, they're selling their inventory, right? So you're like your Walmart and LC is Target, but you got your toasters for $2.99. LC paid $7. So even if it comes down to $7, you can undercut him because you're selling from a long position. All market making wholesale is selling from a long position. They will short to you only when they have to. They would rather not be short. Shorting size is one of the riskiest things you can do in markets. Wholesale market makers do not like to be short, right? It ties up a ton of capital, right? It ties up a god awful amount of capital, and things can go bad really, really quick. For example, you guys were talking about Paul Asmar. You worked at SLKC. I had a buddy at SLKC, and when I started trading, right, I called him up and we were trading this stock, and the stock basically had no float, right? My clients owned it all. Okay. They owned every single share, and it was locked up in a fund manager's desk in Europe. Okay, so the stock was like $35, right? I called him and I said, I need to buy 1,000 shares. He shorted it to me at 35. 10 minutes later, the stock was $75 bid, right? And he lost a crap ton of money selling it to me short. So after that, I'd call him up and I'd go, right, hey, look, I need to buy 1,000 shares, but she's thin. So he'd go, okay, I'll fill you on 100. Let me work the balance. No, man, I gave that guy millions of dollars in order flow, right? So it was like a $20,000 hit or a $30,000 hit. I mean, he makes $3 million every 2 or 3 months off my order flow. Not a big deal. But at the time, it hurt, right? So what I used to do then, I'd call them and go, hey, it's thin. I need to buy 1,000 shares. So they'd fill me on 100. They'd sell me 100 short because they didn't have any inventory, because nobody had any inventory. And they'd say, can I work the balance? Right? So market makers, everybody thinks market makers are naked shorting. If you guys knew how much capital it takes to hold a naked short position, right?
Yeah.
It would make your head spin, right? Especially if a stock is like really low priced. The capital requirements are just out of this world, right? So market making, it's a wholesale business, right? Wholesalers like to buy cheap crap in size and sell it to you at a higher price. That is why a market exists, right? So people don't build short positions. Prop traders build short positions. Wholesale market makers do not. They short to you when no one else will sell to you because that is their job, to provide liquidity. Because if we didn't have market makers, and if you didn't have payment for order flow, if you went to buy 1,000 shares of a $5 stock, you'd get 100 shares at 5, at 100 at 6, 100 at 7, 100 at 10, and 100 at 25, because there'd be no liquidity. Market makers will short you the whole 1,000 shares at 5 and take that risk. That's because that's their business. Yeah, we're finally cleaning this thing up. I'm looking for 37.15 on the top, just if we actually get up there. Anyway, anybody else have any questions? I've gone over the hour. I don't want to keep you guys too long on a holiday. I know you have better things to do.
Yep.
LC is like, yep, let's go. I know what he's doing, so he's like, he wants to go. He's ready to bolt. Brother, go if you have to. Go put on your
No, I'm good. I'm not leaving for like another 3 hours.
Thanks, DJ.
Thanks, everyone.
Did I cover everybody's questions? Did I leave anybody out?
Yeah, did I miss anything? I thought I read them all, but
Thanks, guys. And ladies. Enjoy your day off. Yeah, we'll have more of these. I think my girlfriend's working on Saturday too. So if she's working on Saturday, I'll try and have another one. That's not for sure yet, but I'll definitely. Hollow man, go to the beach. Go do something fun. Go spend some. You know what? Don't be so tight. Go spend all that money that you made this week. Buy your girlfriend something nice, or your wife, or both. Oh, I got him in trouble. Okay.
we'll just have to cut that part out of the recording.
Have a good one, guys.
Take
Oh,
care,
come on,
everyone.
they're traders.
Yeah,
See you, Limitless. Thanks a
degenerates.
lot for yeah, thank you so much for cleaning up the room and putting all this stuff in here. It looks cool. Have a great afternoon.
See you,
All right,
everyone.
Elsie. Thanks, Elsie. Go get in
Yep,
some
take
trouble for
care.
me. All
Will
right.
do.
All right. Bye for now.
Bye.
Thanks, Raj.